Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope all of you had a very nice day of trading today. And once again, Merry Christmas to all of you out there. Hopefully you were able to spend some very nice time with friends and family. And if you did not celebrate, well, of course, hopefully you had a well-deserved day off of rest. Now, in today's markets, guys, the bulls continue pushing on forward, continuing on to the Santa Claus rally. Santa Claus rally, I'll remind you, is the last 5 trading days of the month of December and the first 2 trading days of the month of January. That should take us right into next Friday, so there could still be a little bit more rally ahead of us. And good thing, the market is as well broadening out. It is a lot more broad than it was at the same point in time last week, so we'll take a glimpse into that as well. In today's video, we're going to do a few things together. Number one, of course, is going to be doing a full technical analysis of our major sectors, see how we stand after the Christmas holiday. Thereafter, take a look at our big tech names, see if there's still any big opportunities in some of our favorite tech names as well. Thereafter, take a quick glimpse into some of the high-flying momentum names that a lot of people have been curious about in the comments section. So we'll do a quick little rundown of them and how I play them if ever I do. And lastly, conclude with a very quick glimpse into my portfolio for a few new trades made today, what I'm carrying into tomorrow and into next week as well. So it should be a quicker than usual video, guys. Let us jump right into the action, shall we? So the SPY today, roughly flat. The QQQs as well, roughly flat. But the highlights of the day, guys, really came in towards the rest of the market. We've been commenting in the recent weeks that the market was very top heavy. It was basically big tech and nothing else. Well, now the nothing else portion of the market is finally starting to come back alive. You can see that a lot of decent, even though small gains were had across the bottom half of the market, and big tech today was left fairly muted. That is perfectly fine, guys. Big tech does deserve a day off every now and then. Nice to see that the market has been broadening out. If I put this on a 1-week basis, you'll see that big tech is still the outperformers since the disaster that was Jerome Powell on the last Wednesday session, of course. But all in all, the market seems to be broadening out. Put it on the 1 month, though, and you can see, guys, the damage is still done, and the bottom half of the market has a long way to go. Big tech has largely been the outperformers when measured on a 1-month relative basis, but today was an indication that perhaps the market is starting to re-broaden out. So we'll take a few quick looks at that when we go over the SPY in a few short minutes. Moving into the 1-day relative, you'll see that today was fairly mixed. Although we didn't have any massive gains on any sector, we also didn't have any massive losses. Really straight down the middle across the board. On the 1 week, since Jerome Powell we are pretty much only green, and that is a very healthy recovery by the markets. And we were commenting, guys, that last week, one of the big things that we were noticing was the big money was stepping in. I bring up this chart. This one is from Sentiment Trader on Twitter. And essentially what we were noticing is this chart right about all the way down there. We were saying that retail, which is this red line right here, were dumping the market after Jerome Powell pretty much in fear. And who was buying that fear? Well, the institutions that have been kind of sidelined in terms of buying activity for roughly the past 4 or 5 weeks, now finally capitalizing on that dip, and big money is stepping in when the retail money is exiting the market out of fear. So nice to see that we're getting a bid from the institutions, even though throughout this holiday period, the volume is low. It's nice to see that when fear comes into the markets, institutions find an opportunity to spend their money. So we have some very nice rotation between retail and the institutions right now, institutions largely providing the buying power required to keep this market afloat. So moving into the technical analysis portion of the video, guys, because we don't really have anything else, right? It is currently the earnings blackout period. Nothing really before the 2nd week of January, or 1st week if you don't want to include next week. And even the 1st week, guys, is very thin, right? It really comes alive in the week of the 14th here, or the 13th rather, on the Monday session. And this is the week of the bank earnings. But for the next 3 weeks, it should be fairly muted on that front. And in terms of macro data, guys, we don't have any macro data to speak of whatsoever. Today we got initial jobless claims, but those get released every single Thursday, and there really was nothing to see there. Even through next week, guys, if you put this on to, let's say next week and go into January right there, you'll see that in terms of the macro data, it's really not going to be as a whole that bad. Let's just put it right there. And you'll see nothing in terms of major market moving events. Sure, we have a couple of small ones. Next Friday, we do have the manufacturing PMI. But until that time, guys, which pretty much concludes our Santa Claus rally, we don't really have much. So we could just see the bulls, unless something major happens, the bulls can get an opportunity to kind of just drift higher in these markets. So in terms of the technicals, guys, you will see that really not much has changed, but how it has had a little bit of an impact is the sheer size of the recovery bounce by the bulls. This is something we're keeping an eye on because As of last week, we had broken through all the major levels into a daily downtrend, which led us into a weekly consolidation phase. Now that the bulls have a little bit of a bounce going, we want to see what are the probabilities of getting some follow through to the upside. And for that, we always use the fibs. So the fibs state that if we get a decent size recovery, the bulls have a greater probability of success for a daily uptrend conversion. And as of right now, the bounce size stays very healthy at about 786, 78.6% retracement for the bulls, in other words, and they're looking very strong in the event that we do roll over from here, get a little bit of pullback. They are set up very well. They've created a ton of space off the lows to get those daily uptrends back in motion through the Santa Claus rally. So everything is not looking too bad for the SPY. And one of the highlights of the SPY, guys, is the recovery of several other different sectors, namely financials and healthcare and consumer defensive names. If we were taking a look back here, you might remember I brought this up every single day the last few weeks, percentage of stocks above their 50-day moving average. This is the ticker. You can see that we're still back down here in the 39% range, but we are curling since that day from Jerome Powell into this big level of support. Usually when the market dips down under the 35% mark, it can be a decent opportunity for buying all across the board. And nice to see the bulls responding. There's still a lot of work to do to be able to say that the market has recovered everything and that we are now in a broad-based bull mode rally. But it's nice to see that we are curling, but still a lot of work to do. And the percentage of stocks above their 200-day moving average, largely the same, coming down into here in the low 50s, which has been a buying opportunity more times than not over the course of this year, of course. So nice to see the bulls are stepping in when it really counts the most. And now the past 4 days have been good. You've also seen that in the recovery of a lot of valued names. They're not moving very fast, but they are moving in the right direction. After getting destroyed for the past 3 weeks, we now have 4 days, of rally in a row. So not looking too bad. You see that on the Dow Jones as well. So all in all, the market's not looking too bad. We do have a widening out of the gains away from only big tech into everything else. The problem is everything else is moving a little bit slowly right now, so the job is definitely not done, but it is a very healthy bounce trade underway right now. Still, I am cautiously optimistic on this market. I still do remain largely positioned long. However, I am being very picky about the opportunities that I choose to invest in right now, and I think that is going to be my mantra moving forward, at least until the inauguration, and we get through a lot of the possible volatility early January. We have the inauguration day with President Trump coming into office, of course. We get the start of the earnings season and the guidance for 2025. And in the event any companies have a negative guidance or reduction of their forecasts for profits or possibly forecasting layoffs, well, that is definitely going to throw a little bit of a stick in the wheels for the bull market momentum, right? Moving into the technicals though, continuing on the technicals rather, looking very good for the possibility of a daily uptrend recapture, and the weekly was never lost, guys. We did flush this, but we never closed below. So it is still a very healthy weekly uptrend for the bulls right now, simply just looking for that follow through continuation. And even if we were to roll this over, guys, roll this over back into a daily downtrend, we would still at that point be looking for a weekly higher low. Anything above these guys, 582, still hunting for that weekly higher low, possibly for some trend continuation. And if things really come undone, I've given that scenario in the past, possibly a negative month of January. You can see how much space the bulls have on the monthly. Anything above 512, guys, just looking for the monthly higher low for further trend continuation. The monthly RSI is a little bit overbought. We will review all of these monthly timeframes at the end of the month, which is coming up in just a few short days. But all in all, nothing is looking too bad right now. Moving into the Qs right now. So the Qs down about 0.07%, largely because, well, most of the big tech names today were down, but the QQQ bulls have really held the market on their own backs. So nice to see them take a little bit of a breather. That being said, we had the daily uptrend, flushed the daily uptrend, and now we are looking, can they get it back? Can they get it back is always measured as well by the fibs. As you can see, a very healthy 70% retracement. So in the event we top out here and go lower, the bulls do have a very good chance of resetting into a new daily uptrend. Nothing looking too poor on that front. And even if we were to roll this over, either straight flush or the daily downtrend recapture by the bears, just keep in mind how much space the bulls have on the QQQ relative to the SPY. Anything above 496, right, is just looking for a weekly higher low for further trend continuation continuation, so tons of space for the bulls. I would not say there's any major red flags yet on the QQQs. Moving on to financials now. Financials are recovering very nicely. Take a look at the MACD, right? MACD, after being down roughly since the later part of the month of November, finally starting to curl up a little bit after we rejected in this area as support after the Jerome Powell day. That was once again 47.75 down about 47.20. Now the context is still this very large daily downtrend pattern right now, but we can see that the bulls they've been doing their best to kind of claw back as much as they can as well. A nice 618 retracement on this one, so it gives the bulls a very good chance in the event we kind of top out right here of resetting the daily uptrend. They've created a lot of space between us and those lows, so hopefully they are able to convert on those uptrending patterns. Not looking bad at all for financials bulls. However, the job is not done, guys. This is only step number one. We need to see these uptrend confirmations from all of our major sectors to really be sure that the damage on the weekly is largely done and that we are going possibly for a new weekly upswing. And you only get the confirmation that the weekly upswing is in motion when you reset the daily uptrend. That gives you a very high probability that the weekly higher lows are set and we're possibly just going for another wet leg of weekly upside. So everything not looking too bad. Financials, I will remind you, never lost the weekly uptrend whatsoever. Still a decent amount of space above the lows. Moving on to, I can cover a few of them in here. Visa and MasterCard, the credit card companies, way too extended, guys. I do not see any trades right now. I'm holding both of these companies in the long-term portfolio, but in terms of swing trades, not so much. You can argue you can play MasterCard for possibly the breakout out of the tightening range right here, and I would agree, but not the best risk-reward profile setup in my humble opinion, but it is somewhat of a trade. American Express, same concept. You can argue that you're playing for the trend breakout pattern, but the chart is quite extended, especially on the weekly, and when you take a look at the monthly, guys, American Express is way far extended from the 12 EMA. That doesn't happen that often until we get some more broader based consolidation in some of these names, right? So at the current time, not my favorite place to play in terms of financials, but the banks not looking too bad heading into their earnings, right? We were keeping an eye on these weekly trend higher lows being set for possible further trend continuation. Bank of America literally came down exactly into the level that we were pointing out just last week. JP Morgan, same concept, breaking above the retest, not quite a full retest like Bank of America, but a decent retest of the 12 EMA, now possibly looking like for a little more, and all of the banks kind of look the same. So the credit cards for me is a no, but the banks could possibly be a little bit of a swing trade in that respect. Now, moving on to our next sector, which is going to be another big one, guys. Healthcare. We know healthcare has been very muted over the course of the past 2-3 months. Virtually, well, it started in the month of September, but really accelerated after the election, after Trump's nomination of RFK Jr. as the health secretary, because we know that he will be fighting for more transparency from a lot of pharmaceutical companies, especially the ones that issue vaccines. Now, that being said, we are currently still in this massive weekly downtrend, reacting from the support zone, 140 down to 134, and that once again is the prior resistance highs from this 2-year range of consolidation, 2021 through about 2023. So we are using it, guys, but the bulls have a lot of work to do right now. Massive daily downtrend is still underway, and the size of this bounce, when you compare it with financials in the QQQ, the size of this bounce is very weak, right? Take a look at the size of this bounce, guys. Barely a 30% bounce. So my question to you is, if we start rolling over here and lose the hourly time frames, because now it's a very nice hourly uptrend, but if we lose the hourly uptrend, which is synonymous of it being the topping out of the daily move, when we have such a weak bounce, do you guys think that the bears are favored for the follow through? Or do you think that the bulls have a very good chance of resetting the daily uptrend? Well, of course, when the size of the bounce is so weak and the momentum is so hot, it does favor the bears for more follow through. So a lot of work left to be done by the bulls. It's nice to see them come back after about 3-4 days of trading, but they still have a long road to recovery. First, we need to set the new daily uptrend in motion. That will be step number one. Step number two will be how high does that daily uptrend take us into the weekly levels. Same thing you're looking for, guys. Same thing is going to be looking for that fib bounce, right? Need to see at least us come up to about 143 to have any shot at recapturing the weekly uptrend with some high probabilities. So still a lot of work to be done by the bulls. I'm not opposed to playing some of the highest quality names in healthcare, but it's going to be a bumpy path moving forward. AbbVie, not the worst setup in mind, trying to go for the daily uptrend right here. But if the whole sector is weak, guys, do not be surprised if they just roll this over and head into more consolidation. Same concept for a very strong company like UNH. UNH having a very nice bounce right now. We bounce out of oversold conditions on the daily. The daily uptrend is now set, but look how much work the bulls need to do, guys. It's going to take a very long time for them to reset, number one, the weekly uptrend, and number two, get back above this resistance zone, 555 down to about 526. So I'm not opposed to playing some of these companies, guys, but just understand it's going to be a very bumpy trade, especially through the inauguration day, especially when until we get Trump's final policies on what he plans to do with Medicare and Medicaid, and especially until we get more policies from what RFK Jr. is going to do in terms of transparency for some of those pharmaceutical companies. So going to be a bumpy trade. Not opposed to nibbling at some positions right now, guys, but the sector, let's be honest, is not in favor right now and could be out of favor until maybe even early February when we get more clarity on that policy. Moving into SMH right now. So SMH, not too bad of a day, down about 0.18%. And this one is just not moving, guys. It's the tale of being trapped between two ranges. The overhead resistance range, 260 down to 250, and below support, 232 down to about 220. So until we break one of these two to the downside, the bulls are going to remain relatively muted. It's been a very good alternation between some names here. Some days, a few big names are up. The rest of the industry is down. Some other days, AVGO, NVIDIA go down. The rest of the market goes up. But we have not seen consecutive days and, dare I say, weeks of broad market semiconductor recovery. So that is still on the table, guys. Keeping in mind right now, no clearly defined price action, right? We're just literally in a range trapped below resistance right now. And even on the weekly, right, you can argue that the bulls are making an attempt at a weekly uptrend, but I will not be convinced until they close a weekly candle above 260. So the way that I'm continuously playing this sector right now is I'm, number one, focusing on a lot of the sector leaders, NVIDIA, TSM, AVGO, on any pullbacks for some short put plays, a selling premium below the market essentially, right? Or making some potentially asymmetric bets on companies that I think the market is wrong on right now, that have very cheap valuations into very strong support levels, acknowledging fully well that these trades may take a lot of time to play out, but I do like the levels at which we're sitting right now. So semiconductors remains a little bit of a mixed bag, but could prove to be quite a very good trade come into 2025, because all of the company guidance that we've received is that 2025, the whole sector is returning to growth, a very big contrast in relation to the second half of 2024, when there's been kind of a little bit of cyclicality here and when demand has kind of dipped back down from what it was earlier on in the year. Now, moving on to the Russell not looking too bad, 1.03% to the upside, and kind of same concept as healthcare, right? So we know the Russell has had a fairly decent bounce here overall, but let's not get it twisted. We are still in the midst of a very big daily downtrend. Now, the move right here is very nice, but so far, not the size of the bounce that we can have very much confidence in. It is a 38.2% bounce, a decent sized bounce, but if we were to roll over the small time frames, hourly downtrend, meaning the top end of the daily move, well, I would be concerned that the bears have a good opportunity of retesting the lows, or maybe even lower. So the bulls not out of the woods yet, and we are coming into resistance above us, 225 up to about 232, which is the big zone that I was talking about a lot this year, which is the prior highs from 2020 and 2021 as a whole. Not looking too bad. The bulls are trying to claw back as much territory as possible. We'll see if they can get it done, or maybe they need a little bit more time for consolidation into the move higher. This one will really only start moving up significantly, guys, if we start getting rapid declines in the 10 and 20-year yields. The Russell really needs it, because battling it against these longer term yields, guys, is not the best proposition for the Russell. But if we start to get some real good downside in the 10 and 20, that is when the Russell is really going to come alive, in my opinion. So as of right now, for me, no trade just yet, but if we do flush and come down below 217 down to about 210, this is where I will be making a second attempt at this trade. And now lastly, the Dow Jones. The Dow Jones not looking too bad. As I was saying, it really looks like the IVV sector, right? It looks like the IVV. It even looks like the Russell a little bit, right? Why? Well, because the Russell almost has the exact same allocation as the Dow Jones in terms of the sector weighting, right? Take a look at the sector weighting right there. I'm not too sure why it doesn't give it, but here it is. Financial services, 17%, industrial, 16%, healthcare, 16%, and tech, only 14.7%. It's almost the exact same allocation as the Dow Jones, so no surprise there. The Dow Jones is looking almost the same. Daily uptrend was to the bulls, and now we have this massive daily downtrend flush. Well, daily downtrend flush is right there. So now, once again, it's all the size of the bounce, guys. Always measure the size of the bounce up to about 38.2. So it stands to argue if you lose this hourly uptrend into tomorrow's trading or the day after, well, that'll be the top of the daily move. And then the bulls have a very big job to do in resetting into a daily uptrend with a weak bounce. It would look much better if we bounced up 50% or 618. Then you can say the bulls have a much better chance of resetting into a daily uptrend. But good thing for them, we've now come back above this last area of support, which is pretty much your 43 down to about 42.5. So the bulls still with a lot of work to do, but I would not count them out just yet. Trying to find a local bottom on the weekly, and usually since this rally started in November of 2023, we've always been able to find our footing when we come between the 12 and the 26 EMA every single time. Hopefully this time is no different, and that is pretty much how we stand on the Dow Jones. And that is pretty much it for our sector analysis. The yields, we're not going to touch into them because we went over a lot of them on Tuesday, and not much has changed, right? The bulls are still in very much long-term control here of these yields, weekly uptrend, and the monthly now looking the best, right? Equal highs right now. It's going to take a long way for the bulls to kind of give this one up there on the 20 and even on the 10-year as well. We could be in an environment where we have these longer term yields higher for longer because of the Fed pivot on their SEP, right? They raised the median federal funds rate from 3.4 next year to 3.9 and the longer duration yields as well. So we may be in an environment where we have these longer yields for longer, and that is not going to be very good for some interest rate sensitive sectors such as utilities, such as solar, such as some of the industrial plays as well. So that is something to definitely keep in mind, also for the small caps, of course. Now, moving on to crypto. So Bitcoin also doing a whole lot of nothing, but Bitcoin has been relatively weak. We had a day where the markets were up and Bitcoin was just kind of down on the course of the day, right? So we know that the context was a daily downtrend. The bulls are trying right now to reset into a daily uptrend. Now, overhead resistance stays put 101 down about 97, 98K. That being said, if we are not able to push above, this might end up like semiconductors where we just remain trapped between two ranges, the lower end of which is 91 to 87 and the higher end of which is 101 to 98. What you do not want to see, guys, is the flush of this zone down there. That would be pretty bad. But as of right now, we're kind of trapped between two ranges, similar as where we were back here. Yes, we've lost a short-term momentum, of course, but all in all, it's not looking too bad. Bitcoin is still kind of holding the range. And I'll remind you what we're doing right now. We are in weekly consolidation. So the weekly uptrend is clearly to the bulls, looking for a bit of weekly higher lows for possible further trend continuation, which is why I say maybe the extent of the damage does come down into this support zone, 91 down about 87. We'd have a nice little touch of the 12 EMA, and usually in the context of a nice bull run, that is usually where you can find some decent support between the 12 and possibly the 26. I don't think they're going to go much below 85 at the worst case scenario, but right now, kind of tough to tell, right? The Bitcoin is kind of working against yields, kind of working against the dollar as well, and kind of working against the winding down of the risk on trade that we've seen over the last 2 weeks of trading. But that being said, they have not lost any major levels. And the way that I like to play these types of trades when there's a lot of volatility, I am writing puts under the market, either on BITX or on companies like MSTR, writing puts well under the market, just benefiting from the back and forth action on Bitcoin as a whole, but nothing bad truly to report there. In terms of Ethereum is looking a lot weaker than Bitcoin, of course, right? So Bitcoin's still maintaining relatively close to its all-time highs. Let's be honest, about 11% away. Look at Ethereum, right? From the 50, this is not even all-time highs, 52-week highs, they're now down 18%. So Ethereum trying to do exactly the same thing. They had the daily downtrend underway, and now the bulls are trying to get the daily uptrend back. You need a crack above 35, 37 to really get a push on the daily uptrend back, put an end to this weekly swing on the downside, and just really start continuing for the weekly uptrend momentum, with the final resistance staying put at about 37 to about 4,000 is that resistance range. So Ethereum not looking the best, but a decent other way I'm playing this as well is I'm looking to write short puts under the market, guys. And I fired one off today using ETH. I went way out in January for the $6 short puts if they want to drop Ethereum all the way down into the 28, 27 level, which corresponds with ETH around $6. No problem at all. I will be happily picking up some shares down here, guys, and riding Ethereum to the upside. But as of now, the altcoins have been, a lot weaker than some people were expecting. We were noticing that there was this nice break of trend on Bitcoin dominance, right? Bitcoin dominance is just the percentage how much Bitcoin's weight represents in all of crypto, a little bit like how much Apple represents in the entirety of the S&P 500. Well, this is a chart for Bitcoin. As you can see right now, it represents about 58% of all the crypto market in terms of the sheer size of Bitcoin in relation to everything else. We were noticing this big break of a trend, a 2-year uptrend, as a matter of fact. Big weekly push down in the early portion of December. And now, unfortunately, over the last 2 weeks, as crypto has kind of gotten weaker and weaker across the board, Bitcoin is now retaining its dominant status. So will we be able to finally do the weekly flush and give the altcoins the rally that everybody's been expecting? Well, altcoins have went on a rally, but the rally has been kind of short-lived since the election, right? You'll notice a lot of these altcoins, they had a tremendous push, nice 5-6 weeks in a row, and that was pretty much it, right? Big push and then giving it back. Even the meme coins, very big push and then giving it back. We can go through this entire list and you'll notice that largely a lot of them are the same. A very good big push and giving them back. So is 5-6 weeks of altcoin rally the only altcoin rally we're going to get for the entire cycle? Probably not, but the Bitcoin dominance doesn't appear to want to give way just yet. However, now I still do think that if your position is you do believe that there's more altcoin rally coming, and I do believe as well, this could be a very decent time to nibble back into the positions, right? If you're able to take profits on a lot of these at the higher levels, right, after the rally, now is not a bad time necessarily to kind of nibble back and create those positions again in some of your favorite coins. I'm not here to, I know I'm picking some out of this list randomly, but I'm really not recommending any. I'm just saying they kind of all look the same, right? Big rally up, push down. So depending on which ones you prefer, even if some are not in this list as a whole, could be a decent opportunity to kind of build the positions back into the final boss, which is the 2025 possible next leg up on Bitcoin, maybe taking us up into the 120K mark, which should really accelerate a lot of these altcoin rallies. When Bitcoin is done, that is when a lot of these altcoins are going to come alive. So positioning in terms of that, I have as well been building back some positions in a lot of my favorite altcoins over the past week and a half since the Jerome Powell incident. Now, moving into our big tech names, shall we? So moving into Apple real quick, give me a very brief moment. And let's get into it. So Apple, I mean, not much has changed on this chart at all, right? You have to be careful though, because we do have a little bit of daily RSI divergence, right? Higher highs on the chart and lower highs on the RSI. So Apple might be nearing the end of its push now on the daily, but everything is looking very healthy. It is a clear, defined daily uptrend right now. Any move lower, going to be looking for a higher low. Anything above 245, just looking for a daily higher low for possible further trend continuation. And even if we give it up, guys, over the next 2 weeks of time, what are we looking for? Looking for a weekly higher low for further trend continuation. Now, I do not believe Apple will come all the way back to its previous all-time highs. Anything is possible, of course, but that is a very far ways away now for Apple. If anything, we may only come down, the 12 EMA is going to be curling up this entire time. We may only come down to about 250, 245 before finding a new base of support, which would roughly be in line with these guys over here on the daily time frame. So all in all, Apple looking very solid. I'm not a buyer up here. I'm holding my long-term shares, but the swing trades up here, guys, it's very extended, both on the weekly and the daily. I think Apple has kind of run its course. The risk to reward profile right now is very, very, very thin, and the valuation at 250 right now should be at about a 3.5 peg. So everything is telling me that this stock is expensive. The chart is telling me it's expensive, and the valuation as well is telling me it's expensive. I'm still not selling any long-term shares, but I'm also not buying any more, nor am I planning to make any swing trades up here. But congratulations to all long-term and short-term Apple bull holders out there. It's been a great last 5, 6, 7 weeks of rally. Moving into AMD. So AMD continuously on the back burner, so to speak, right? We know that there's possibly a move coming on AMD, but the timing of the move is the trick, of course, right? What is the context for AMD? Well, we know that we're in a monthly downtrend. We're in a weekly downtrend as well, and we are still in the context of a very large daily downtrend that the bulls are trying to claw back right now. Unfortunately for them, they have to start everything from scratch. So now we have a nice few days worth of bounce. What are we looking for here, guys? The bulls need to do one thing first. They need to reset the daily uptrend. We have a very nice 70, 60% bounce right now, 60% retracement to the upside. It's up to the bulls to give us step number one, which is conversion into a new daily uptrend. If you can get the daily uptrend underway, then we measure against this guy right here, 144. How much of this weekly move down can we recapture? And then can we get the weekly trend in motion? And then same thing on the monthly. How much of this monthly move can we retrace for the upside? So if you understand anything from that analysis, you know that there is a lot of work to be done by the bulls so far. Now, in terms of the flip side, in the event the bulls just keep rolling over to the downside, guys, we're quite simply looking at the 200 weekly moving average down here, 115 down into further level of horizontal support, 115 roughly down to about 105 is kind of the last lines of defense, pulling all the way back from September and October of 2023. This will be an area that I'll probably go shopping for AMD quite heavily because the valuation right now is very, very cheap. The company is growing well. It's just the company is out of favor in terms of narrative, right? Now, in terms of the EPS expansion, look, all the analyst price targets are above. EPS expansion is gorgeous. Revenue expansion over the next few years is gorgeous as they ramp up their data center chips, right? For all the hyperscalers. So it remains to be seen, is there going to be a high demand for these chips in competition with Blackwell, or are they just too far behind right now to catch up to NVIDIA? So obviously the risk reward profile of this trade is looking quite attractive because if the thesis does play out the way that many people think it does, we're probably heading back to 160, 180, no problem at all. The valuation would support the price increase or the multiple increase all the way back there. And the risk, in my opinion, is not that much, maybe down to about 105, 100 type of thing. So you're risking really about, let's call the risk reward as it is, right? I'll never say that there's no risk in a trade. There's always risk in every single trade. But right now, the profile of these is getting a lot more attractive than not, right? If our risk is all the way down there, the flush of the 100, and the reward is all the way up here to, let's say, 170, 180, well, you'll see the risk-reward ratio is not too bad of a trade right now. It really isn't, and I'm being very generous with my risk at 100, right? It's about a 2-to-1 trade right now. Not the worst in my opinion. Very nice risk reward profile for AMD, which is why I am in this one myself with some bleep call options. Moving into Amazon right now. So Amazon also down about 0.87%. Not the best day for Amazon, but also not the worst day, trading right within Tuesday's prior candle. The context right now was a daily uptrend. They flushed it, and now we are looking, can the bulls reset into a new daily uptrend? Or do we just roll this over and go into weekly consolidation? Well, either case would be fine, right? If we continue just marching higher daily uptrend, well, the upside resistance, of course, is the all-time highs at about 233. However, what everybody's wondering is what happens if we roll this over? Well, absolutely nothing, guys. It would still look very healthy. Who's in control here? The weekly bulls are definitely in control. Just looking for a weekly higher low for possible further trend continuation. Anything pretty much, down here, 215 and about 210 is the next support level lining up with the 12 EMA. And the prior resistance from these guys right here should be current support. It wouldn't look too awkward, right? If Amazon pulls back there and continues rallying into 2025. So looking very good, guys. I'm not going to call this one either way right now. The bulls are still looking very strong, but the one thing I will say is if we do come down into this area, that's the next area that I'm planning to play Amazon for a few swing trades. The valuation at about 220 is very manageable right now, and they should be having a tremendous year in terms of free cash flow and profitability into 2025. Moving into Google right now, Google down about 0.24%. Not the worst day for Google, but same thing, not the best day either, right? Kind of looking like Amazon in that respect. It was a nice daily uptrend into the all-time highs, and now we pulled back a lot, so we flushed the lows. Now it's up to the bulls. They have a very nice size bounce. Take a look at the size of this bounce, guys. This is what I mean when you have a very healthy bounce. 70% retracement gives the bulls a very good chance at resetting into a new daily uptrend because they lost the lows right here. Now they have to do it again in a two-step recovery process. That is if they don't just clearly V-shape this, of course, right? However, if even with this size bounce, it is not enough and Google chooses to roll over to the downside, not that big of a deal either, in my opinion. Who's in control of the weekly timeframes here? It is definitely your weekly bulls. We would just be looking for a weekly higher low for further trend continuation. Anything above 165, looking for that higher low for the trend continuation. So in my opinion, if I'm going to be looking to play Google, it is really 187 down to about 180. Let's call it 190 down to about the 180 range. This is the pocket that I'll be looking to buy more Google and swing trade more Google in the future. Right now, the valuation at 196 is a very manageable 1.43 peg and a 24.3 forward PE. Very, very cheap still, even if we're at the all-time highs. I was saying it back here and it was true. It remains true up here. Still one of the cheapest trades in the entire list of the Mag 7 names. Moving into Meta right now. Meta down about 0.72%. One of the major loss leaders in terms of big tech. I mean, with Amazon and Netflix, of course. But so far, guys, they haven't really lost any major levels, of course. What is Meta trying to do right now? Daily downtrend is clear as day. Now we have a decent size bounce. It's not the best size bounce, but it is a bounce, right? They came up about 50%. So really 50-50 odds of the bulls being able to recapture the uptrend versus the bears' ability to get the downtrend flush. That being said, we have to measure a few things of confluence that are happening right now. Where did they put in the higher low, and where are we currently trying to form another base of support to reset the daily uptrend? Well, this is the fallback zone, guys. The whole 600 down to about 580. This is the fallback zone. You want to see a bounce above, use it as support, and go for the daily trend change. It's not looking bad at all. And when we zoom out to the weekly, we know the bias is bullish because the bulls have completely engulfed the move, looking for the weekly higher low for further weekly trend continuation. So this is not a bad trade setup at all if you are a bit of an aggressive bull before waiting for the confirmation, which would be an entry here, stop goes here, and then you go for the all-time highs. If you're more of an aggressive bull, you can possibly jump the gun. Well, you know, theoretically speaking, not you personally, because none of this is financial advice, right? An aggressive bull would take the trade here, the stop loss would go below the lows, and you are targeting these highs right there, and you're going for the daily trend expansion based off this support zone and based off the fact that we are still in a very nice weekly momentum move higher. So Meta, not looking the worst at all, and even right now at the current valuation, right around 600, guys, the peg is not so bad, talking about maybe a 1.9 peg. Not the worst. Free cash flow is not the worst, but I wouldn't say the company is cheap, but the fundamentals are extremely strong for this company. Moving on to Microsoft right now. So Microsoft also a little bit weak today, 0.28% to the downside. And we know the context of Microsoft is as well another name that had lost the daily uptrend after the Jerome Powell flush. Now, that being said, right, daily downtrend was in motion. Now we look to the bulls. How high can we bounce? And this arguably is one of the weaker bounces across big tech, not even a 50% close above for a bounce ratio. So in the event we start rolling over the short-term time frame, such as the 1 hour time frame, right? If you pull off the 1 hour downtrend, there's a very high likelihood of revisiting the lows or maybe even lower down here. Good thing for them, the bulls have a lot of space when measured on the weekly time frame, right? Where are we in the context of Microsoft? I'll remind you, we are above the range of resistance, and now we're going to use that as support. We are also above the short-term moving averages, and the weekly higher lows are all the way here, 410. Anything above 410, looking for a weekly higher low for further trend continuation. So looking for the bulls in this area to constantly play defense. And if we do pull back a little bit lower, I wrote them last week and I'll do it again, guys. I'll be looking to write some short puts here or even some swing trades on Microsoft. Not a bad trade idea using this as your support range for possible expansion into the all-time highs throughout 2025. Not looking bad at all. I will remind you the analyst price targets are all, for the most part, in the $500+ range. So there is some very decent upside to be had on Microsoft, all things considered. Moving on to Netflix right now. Netflix down about 0.86%. Not the worst day for Netflix, but also not the best. Still the context right now of trying to recapture the daily uptrend, right? So very decent size bounce on Netflix right now. I would say that this is a 80-90% plus bounce. Need to get the daily uptrend back though. If we put in a lower high into lower low into the downtrend flush, well, you guys know the drill, right? Netflix is very healthy, guys. There's a ton of space on this chart for a weekly higher low. Anything at this point above 750, looking for a weekly higher low for further trend continuation. So we'll see how it goes, but Netflix up here, not the best risk to reward. Still overbought on the weekly as a whole. The daily, not so bad anymore. But I mean, the upside is, of course, the $1,000 mark, but the downside, I mean, the downside is quite pronounced. If we were to flush to the downside, probably going to the 12 EMA, which is about 850. So I'd say the risk reward right now is kind of equidistant, right? $75 to the downside risk, and then $75 worth of upside. It's a one-to-one trade. So there is a trade to be made here. I mean, you could argue you could put the stop loss here, right? But it's not the best risk to reward, especially into weekly overbought conditions. That being said, I love Netflix as a company. I'm not selling any of my long-term shares anytime soon. I think the company will continue to outperform into 2025. Moving into NVIDIA right now, NVIDIA was actually down close to about, let's call it a 1.5% today, recovering nicely though. So we know the context for NVIDIA was this daily downtrend after Jerome Powell, and now the bulls have done something, guys. we have now reset into a daily uptrend. And what we're currently looking for right now is the daily higher lows. At this point, anything above 128, looking for the daily higher lows for possible further trend continuation. Not looking too bad, using all of the moving averages as confluence on the daily. The 12, the 26, and even our little buddy, the 50 EMA, is sitting right there below the price. They used it as support today. We will see if they can get their act together and convert this into a brand new hourly uptrend, continue this daily rise into possibly next week as well. Would look very good and would really push the semiconductor market higher, a lot higher in terms of the index as well. So not looking too bad, but once again, the fallback area is 130 down to about 125 as support. I continue liking this one to play short puts, guys. Short puts around this area, in my opinion, are a very smooth trade for a very solid company because it's all the previous weekly resistance highs that are now going to be acting as support. So not looking the worst on NVIDIA's front. And I'll remind you what we're going for here. We are going for the weekly trend recapture. It may take some time, but that's what the bulls are gunning for right now. The chart, in my humble opinion, is not looking too bad. It is actually looking quite good for some follow through. And if we somehow roll over, no problem at all. There's enough volatility in this one to where we can be playing short puts under the market, selling options under the market, and should be rewarded very handsomely into 2025. Moving into Tesla right now, Tesla down about 1.76% today, but I mean, not the biggest deal, right? They had a very strong day on the Tuesday, and now we just gave back a tiny little bit of that candle. That being said, what is the context for Tesla right now? Beautiful daily uptrend, looking for a daily higher low for the trend expansion. However, if we cannot get above this and we start moving lower and lower, there's two possible things that will happen. One, we either get a consolidation range, a tightening range, something like this, right? Consolidation range. Or the worst case scenario, we flush the lows 415, go into a daily downtrend, and go into weekly consolidation, which would not be the worst case for Tesla, right? Weekly is overbought conditions, but we know it's Tesla. They can stay overbought for a long time. Worst case scenario, we're probably coming back and retesting these prior all-time highs, which is again 415, 410, all the way down to roughly 375, 380-ish. This whole range right here, the 12 EMA would probably be able to play catch up in that time, and the bulls probably can find a decent base of support. The context, of course, is this massive weekly uptrend. Right, massive weekly uptrend at this point. Anything above these guys right here, I'll call it. Anything above 325, just looking for a weekly higher low for possible further weekly trend continuation. So we'll see how it happens on Tesla. But moving forward, you know, the bulls have been a little bit, they were very strong on Tuesday, giving a little back today. I wouldn't say that this is the end of the move as a whole, guys. Keep an eye on your hourly timeframes. Still no hourly downtrend, so you cannot say that this move here is done. But if we lose it into tomorrow's session, that would mean that this leg higher is done. And then you possibly looking for best case scenario, the tightening range. And worst case scenario, if we do flush here, guys, there's a lot of support down here. This is where I'll be playing some Tesla longs, in my opinion. If we come down into here, I'll probably be looking for some short puts under the market and maybe for some bullish directional plays, call debit spreads, call options, something like that, for a little bit of a swing trade using the higher time frames for some possible expansion into early January. And now lastly, moving into Palantir. Palantir not looking the worst today, same thing as Tesla, right? Just giving back a little bit of the Tuesday candle. Not the worst thing for Palantir as a whole. The context is still this very beautiful daily uptrend. The bulls have never lost at all, barely ever losing the 12 EMA, which is your short-term trend guide, by the way. So as of right now, even if we do pull back, what are we looking for? Looking for a higher low. Anything above these guys right here, 70.24, just looking for a daily higher low for further trend continuation. Where can we possibly come back into, guys? Well, all these little range resistance highs right here, talking about 78 down to roughly about, let's call it 76, 75. And the 12 EMA is sitting right there as well. This is otherwise known as the classic breakout, retest, and run trade. So there is a trade opportunity here on Palantir if you are willing to take it, of course, and you are willing to kind of forget the valuation, right? Because the valuation has been decoupled from the stock since a long time. Now it is just pure hype, pure momentum, which is fine, guys. It's perfectly fine to play these momentum trades, so long as you respect the technical analysis, right? If we are to take the trade down here, the stop loss goes below these lows, because if you lose that, it invalidates the daily structure. It will invalidate some of the weekly structure as well. So if we do take the trade down here, the stop loss will go there, and then at that point, you will be targeting for some upside, the 90 psychological. So if you come down here, 75, the stop loss is what? $5, and your upside is maybe $15. It's a very decent risk to reward setup trade if you're looking to play the momentum on this one alone, but just constantly buying at the highs and crossing your fingers arguably not the best way to trade if you're really looking to optimize for the risk reward setups, right? So everything looking very solid on Palantir, no red flags to speak of just yet. So that's pretty much everything we had for our daily market rundown recap. Now, in terms of some of the momentum plays like SOFI, we'll go over a few of them and I'll give you my impressions, right? SOFI forming a very decent base of support, 16 out of 15. The way I like playing this one is writing short puts under the market. SOFI looking to form a base of support for the last 5-6 weeks. They've kind of, they didn't really pull back much, but what they are using is all these prior guys down here. They've now pulled into the higher end of this lower area, and now they're kind of using that same base as support. Even though they didn't pull up high enough to use it, they're still using it right now. Not looking that bad for some follow through, guys. I really do think that SOFI is poised to go towards the $20 range, right? Are the fundamentals trading a little bit rich right now at $16? Yes, absolutely. But we know when it's hype and momentum around a name, we know that this can continue potentially for a bit longer. That being said, I would not be surprised if this does put in a very beautiful second leg of weekly rally up into the $20 range. So I'll remind you, if the trade is here, the stop loss goes below down here, roughly about $14.50, $14, and you are targeting $20 for some expansion. That is a fairly decent risk reward setup in my humble opinion, guys. Anything below there, all the way up to about 20, it's about almost a 2-to-1 risk to reward, right? Very solid risk to reward setup for SOFI, in my humble opinion. Not the worst trade out there. Another trade like SOUN, right? This one is a little bit too high, guys. Weekly RSI is 90. And when we get into a few more of these names, you just have to play the price action for what it is, right? You can't focus on the valuation too much because we know that's not what's moving the stock right now. It's all hype. It's all momentum. You can call it the gamma squeeze from the options as well. There's many things, right? Short squeezes as well. Just play the daily higher low setups into further trend continuation. Not a very good proposition to be buying into the all-time highs, but when you notice that it's setting up for a range of support and you get one last push down, very easy. Stop loss goes below the lows, then you're targeting pretty much the range highs. So when you're looking for these trades, to play these trades, buying here and crossing your fingers is not the most optimal setup as a trader. You do not learn anything from that. If anything, you just learn that chasing the market sometimes works and sometimes doesn't. If you are going to play these names, try and do your best to play the price action with defined levels to be making your trades off of, define stops and define take profits. You'll learn a lot more as a trader, guys, and follow the momentum. I'm never opposed to following momentum. I know I don't talk about these trades a lot, and I know I'm kind of viewed as the fundamental and the logical guide type of thing, and that's fine. You'll find me playing these momentum trades a few times. I play them more in the Discord with our private members, not so much on the channel, because I just don't want anybody to lose money if you get caught on one of these 10, 15, 20% pullbacks, right? But they are very decent names. You can make a lot of money very quickly on them, but they're not names that I'd be putting 100% of my account into. If I had, 25, 30K, 40K account, would I put $1,000, $2,000, $3,000, $4,000 into these and just go for it? Sure, because that's the nature of having a relatively small account that you're trying to grow quickly, right? Sometimes you do have to take some of these plays. It's the same as all these, the quantum computing stocks that are pretty much a dime a dozen right now, right? RGTI, another very solid name. Play the price action lows into the 12 EMAs, guys. Higher highs, higher lows, higher highs, higher lows. Play the pullbacks accordingly, and that is how you get usually the best entries, and then you can just kind of go for it, right? You get a very decent pullback, you just go for it. You don't know when this momentum is going to end, guys. It's the same thing. They pump one sector after another. First this year was ASTS. It was all the rocket plays, right? ASTS and Rocket Lab. Rocket Lab now putting in more highs, right? Then they went on to the clean energy plays, right? The nuclear power plays like SMR, names like Oklo, right? They squeezed those first. Now those have kind of been hesitating for roughly the past couple of months. Now they're doing the quantum computing names, QUBT, I don't even remember the ticker, Rigetti. Right? Rigetti Computing. This one too, right? QUBT, right? IONQ, this one, right? It's the same trade, guys. Just notice where the market is moving, watch the momentum, and just play the price action for what it is. Higher lows into prior support or prior resistance, which is now support. Just play the price action for what it is, and you can go for it. But once again, YOLOing your entire account, guys, is completely up to you. You guys know me by now. I will always advise against it, but you guys are free to do whatever you want with your own money. Just be safe, just be cautious on these names, and try your best to play them with defined risk to reward setups. I am not opposed to playing them. You can make a lot of money on these names, but just do not overstay your welcome, right? Give yourself defined take profit levels. If you're in QUBT here and the stop loss is down there and it goes below, don't say, well, I'm just going to stay in it, stay in it, because it may never come back, right? None of these companies are going to make any money in the next 3-4 years in terms of revenue, guys. These are pure short squeeze plays. And if you guys think these are going to squeeze like this over the next 3 years, just remember what happened in 2021, right? All good things come to an end. And when there's a new shiny thing that comes into play, people just pivot to that sector, right? 2-3 weeks ago, it was drones and a lot of these eVTOL companies, which are still doing well, you know, but attention is the currency right now. When the attention leaves some of these names, well, then you may not see them come back for a very long time. These names, this is not the first time, guys. These names are all popular back in 2020 and 2021. You guys don't remember what the names were back then? They were like the Plug Powers. It was the EV names and all the EV charging stations and stuff like that, right? This time is no different. Now, this time, there's the rocket and space exploration companies. There's the nuclear power plant companies, which is arguably the most logical narrative of them all. Then there's quantum computing. Nobody knows this, but quantum computing, guys, before it becomes profitable and they solve for errors, I mean, Google's far ahead, but a lot of these smaller quantum computing companies, guys, they're not going to make any revenue for the next 5-6 years, if any. You know what I mean? So just play them for what they are. Pure hype, pure momentum. Do not get married to the trades. And that is my views on those. So congratulations if you had made money so far. But like I said, play them in a very logical fashion, right? Don't get over enthusiastic and don't get overly fearful either. Try to stay as neutral as possible. Play the chart for what it is. Play the price action for what it is, guys. Don't get married to any of these trades, thinking that they're the next Google, the next Microsoft, things like that. Maybe, who knows, guys, but to be honest with you, I've seen so many of these in my last 10-12 years of trading. The narratives are fun, but oftentimes you do not know when they're going to end and when the attention is going to shift to some brand new shiny narrative, right? As we've seen over the past. So that's everything for that. Now let's move into a little bit of portfolio and some of the trades that I closed today, guys. Very simply, right? Well, we didn't close much today as a whole, guys. The only ones that we did open in the past few days, we had some microns here. They're doing well. I'll show you the portfolio in just a few short moments. And we also opened a brand new BITX trade today. But in terms of closing, all we did is we rolled covered calls. We had NVIDIA, right? We got assigned NVIDIA at 137 a few weeks ago. Once again, today, we benefited from a roll in premium. We got another $1.50 in credit. So if you take a look at the assignment tracker right here, which I always keep for our Discord members, the NVIDIA assignment, look, we got assigned 137, guys, a few weeks ago. Look at all these covered calls. All these covered calls, right? This new one is $1.50. Now, our average cost from 137 is down to 131.49. So we're up a lot on NVIDIA right now, right? Looking very good. I will continue to roll this covered call position as a whole. And that is pretty much everything. And the other one that I'll show you guys is one more big trade that we took today. We are now finally in NVIDIA Leaps. So I know you guys have been waiting for this one for a while. Price target, the $170 to $180 range in 2025. We went with the 121 calls for June 2026. I went with one contract for right around $4,500. The order is right there. NVIDIA, very quite simply, guys, I'm looking for the monthly expansion into the 170, 180 range, which is all the way up there. Lines up with a lot of analyst price targets. It would not look so crazy on NVIDIA, would it? Monthly trend expansion into possibly 170, 180 throughout the next year of trading as they continue to assert their dominance across the data center landscape as a whole. Wouldn't look too crazy. One thing's for sure, though, if we do come down here into the low 120s, this is my next DCA for the Leaps. And then after that, I'm done. I'm letting them ride right around the 200-day EMA. So if NVIDIA just falls apart, comes down here, this is my next DCA. For now, I'm going for the possible weekly uptrend reversal for the bulls. But in the event we do not get it done and just continue consolidation into down here, this is my second and final DCA on that NVIDIA trade. I went with a ton of time for that specific reason because you're not too sure if it's going to launch right now or pull back, right? Everything's looking good, but if it does pull back, I left myself room to DCA, which should always be the case for any of your leap call contracts, guys. Always leave yourself some budget to DCA because you're never actually sure whether or not you're going to actually pick the bottom of the run. Anything can happen in terms of macro and the economy, news specific around AMD and stuff like that, right? Looking into the portfolio now, So if you're looking at the portfolio for a few of the new trades made today, guys, you'll see there's not that much. I will not go over all of these. We'll go through all of these tomorrow when we do a full portfolio review, but I just want to show you the new positions. Number one is BITX, another short put around 45. So we sold some nice premium there. We got 57 cents for them. BITX by 45 for next Friday. That would be another 10% drop on Bitcoin. And if Bitcoin does come down another 10%, I will be a buyer down here of BITX and running some very fancy, juicy covered calls on that position. The next one is ETH, as I was saying. 2 times leverage bet on ETH. So we got $6 puts, short puts for about 35 cents. That's a very solid trade as a whole here, guys. If you want to take a look at the premium, right? This is 3 weeks of time, and we got a roughly 2% per week. Our minimums are 0.5% per week. I would love buying Ethereum back here around 26, 27, and this is a decent way to do it without taking on so much risk. So that is one new position. Very small though. I only went with 5 contracts. In the event we drop more, I will add more to this position, but looking quite good. I'm very happy with that trade as a whole. And then lastly, we rolled the NVIDIA calls, of course. Here is the roll. We are now set for next week with a bunch of premium here. This is not the true premium because it's a roll, but all you need to understand is we got about $1.50 in excess credit above the ones that we closed today. So those are the few portfolio changes for the day. Not more than that. Some of our value plays are coming back. We'll do a full portfolio recap over the course of the day tomorrow, and I will present you guys a bunch more swing trade ideas over the next few coming days as well. So that's a very brief position recap in terms of my new opening trades. Hopefully you guys enjoyed that, and hopefully you guys enjoyed the whole video. If you did, consider dropping a like. That's it for me. Would really appreciate it for the growth of the algorithm. Also consider subscribing to the channel if you're new. We do these recaps every Monday to Friday after the close. And lastly, if you have any questions at all, always feel free to leave them down below in the comment section. I would love to answer you, and usually I answer within the first 24 hours. So if you have any questions at all, please always feel free, guys. And in the event that you guys want access to all of these trades in real time, here's all the trades since the inception of the Discord. The green check marks are the wins, of course. I can't guarantee that future performance is indicative of past performance, but I've been doing this publicly on the channel now, guys, for the past 2 years, and it has been a fairly consistent strategy as a whole, a combination of the wheel and several directional plays. So if you want access to all of the credit plays, the selling options plays, and also the call plays, the call debit sprays, the swing trade, the swing share trades, the long-term portfolio plays, all of the plays essentially. The link to the Discord is down below in the description. We also do private live streams every Monday to Friday for about an hour or 2 at the market open. And obviously, guys, you can ask me a ton of questions all throughout the day on your stocks and your options, many more things such as private videos that I do not feature on YouTube, psychology videos, trading strategy videos especially, a lot of different very juicy videos that have helped out a lot of our members in that section down there. So if you guys want access to the Discord, the link is always down below in the description. I will extend the promotion for one more day until tomorrow night, midnight Eastern. The promo code for 30% off your first month in Discord is capital letters Santa, of course, for Christmas. I will extend the promotion until tomorrow, December 27th, midnight Eastern. So if you guys want to join, would love to see you guys in there. And if not, I guess I'll see you back on the channel. Take care, guys. Always a pleasure. I will see you tomorrow after the close. Happy trading and peace.